When you hear 3M, you probably think Post-it notes or Scotch tape, but that's just scratching the surface. 3M, ticker MM, is a massive industrial force. Its products are everywhere, from your phone to your dentist's office. They're in healthcare, transportation, electronics, and consumer goods. This is a company that literally helps build the modern world. Why should you care? Because when a giant like 3M starts to get interesting, it can signal big moves for the whole market. This isn't a flashy tech stock, it's a real business with real profits and a long history of rewarding shareholders. 3M's edge? Relentless innovation. Their scientists get 15% of their time to invent, and that's led to blockbuster products and a fortress of patents. But lately, the stock's been in the doghouse lawsuits, slow growth, and a lot of pain for investors. The big question is this a value trap or the turnaround play of a lifetime? We're here to dig into the numbers, check out the new management, and see if 3M can pull off a comeback. This is about more than sticky notes, it's about a company fighting to reinvent itself. Ready to find out if there's money to be made? Let's dive in, let's get ready to make some money. Let's talk dividends. For decades, 3M was a dividend king, raising payouts for over 50 years. That streak just ended. After spinning off its healthcare business, 3M slashed its dividend to about 70 cents per share, or a 2.7% yield. For income investors, this was a shock. But was the old high dividend even sustainable? With billions in legal settlements looming, the payout ratio was sky high. New management made the tough call, cut the dividend, save the company. Now they're targeting a 40% payout of adjusted free cash flow, a much healthier level. The new lower dividend frees up cash to pay down debt, invest in growth, and handle legal liabilities. It's a strategic reset, less yield now but a stronger company for the future. Is the new dividend safe? Much safer than before. The real question, do you believe in the turnaround? Are you willing to accept a smaller check now for a shot at long-term gains? That's the trade-off. Sometimes the right move hurts in the short term, but pays off down the road. Let's see if 3M can deliver. Time to dig into the numbers. 3M's latest earnings, a mixed bag. The good profits beat expectations. Cost cuts and restructuring are working. CEO Bill Brown is making things leaner and more efficient. The bad sales are still soft, especially in consumer electronics and some auto markets. Top-line growth is the missing piece. The ugly, you can only cut costs for so long. Eventually, 3M needs to grow again. By segment, safety and industrial is steady. Transportation and electronics is weak. Consumer is just okay. The turnaround is underway, but it's early days. The company is more profitable, but growth is the next big hurdle. The path forward isn't a straight line, there will be bumps. The takeaway? Progress, but not perfection. 3M is moving in the right direction, but the real test is reigniting growth. Investors need patience, and a close eye on whether new products and markets can drive sales. This isn't a home run yet, but it's not a strikeout either. The story's still being written. Let's see if 3M can keep rounding the bases. Stay tuned. Big changes at the top. Bill Brown is the new CEO, and he's not from inside the company. Brown's reputation? A no-nonsense operator who gets results. That's exactly what 3M needed after years of bloat and legal headaches. His first big move. Finishing the Solventum spin-off, separating healthcare so 3M can focus on its core businesses. This unlocks value and simplifies the company's story. On the legal front, 3M has settled its massive PFAS and earplug lawsuits, over $16 billion in total. Painful, but it brings much-needed certainty. The market hates uncertainty more than bad news. With legal overhangs clearing and a new leader at the helm, 3M finally has a shot at real change. The combination of fresh leadership and legal clarity is a powerful catalyst. Now it's all about execution. Can Brown streamline operations and spark growth? The stage is set for a turnaround, if management can deliver. This is 3M's moment of truth. So, what's next? The biggest opportunity is the turnaround itself. Expectations are low. If 3M just stops getting worse and starts improving, the stock could move higher. The company is positioned for growth in areas like electric vehicles, automation, and advanced materials. The Solventum spin-off lets 3M focus on these high-potential markets. But the risks are real. Execution is everything. Turning around a century-old giant isn't easy. If cost cuts hurt innovation or growth stalls, the stock could stay stuck. The global economy matters too. A recession would be a big setback. Legal settlements will weigh on cash flow for years, and new legal risks could always emerge. Bulls see a comeback story. Bears see a company with big challenges. The battleground is set. Will 3M surprise to the upside or disappoint again? Only time will tell. So should you buy 3M now? It depends on your risk tolerance. This isn't the old boring blue chip anymore, it's a turnaround play. If you're patient and can handle volatility, the bull case is compelling new CEO, legal clarity, a leaner company, and a stock still priced for pessimism. The dividend cut was painful, but it gives management the flexibility to execute. My take? Start small. Buy a little, watch management's progress, and add if the turnaround gains traction. I believe in Bill Brown and the new direction. The worst looks to be over, but the road ahead won't be smooth. For investors willing to take a calculated risk, 3M could be a comeback story in the making. Do your homework, stay patient, and don't be afraid to own a company fighting for its future. Sometimes that's where the biggest winners are found. Booyah! The story isn't over yet. Let's see if 3M can stick the landing.